Good day, viewers. Welcome to another episode of Financial Accounting Made Simple channel. Today, we will be looking at the subsidiary books. When we are discussing subsidiary books, we are talking about the books of prime and original entry, that business transactions are initially recorded before being transferred to the ledger. For subsidiary books, we have different types. We have the sales day books, which we also call the sales journal. We have the Potter's Day book, or the Purchase Journal. We have the sales return day book, or return award journal. We also have the purchase return day book, or the purchase or return outward journal. We have a cash book. We have the general journal or journal proper. It is good to know that even have these types of labels helps us to ascertain the amount of purchases and sales at the end of the period. Also, it helps in the ascertainment of the debtors and the creditors' balances. It helps in the preparation of the control account. Today, we will be looking at the sales day book. Sales day books are books that are used to record goods that are sold on credit to a customer. So in preparing our sales day book, we're going to have our day book journal prepared in this format. We have the date of the transaction, the particulars of the transaction, the folio, the details, and the total amount involved in the transaction. We'll be looking at the question that has to do with the sales day book. We have to enter the following transactions of Fanny and Sons Enterprise in the sales day book for the month of August 1996 opposed to the ledger. August 1, 1996. The sold to Roger Miller 20 bags of sugar and 14 naira each. 12 plates at 140 naira each. On the August 12, the sold to showroom 12 bags of cement at 45 naira each. 5 packets of tea at 15 naira each, with a trade discount at 10%. And on July 27, the sold to Muibat 15 shoes at 65 naira each. 100 packet shirts at 13 naira each, with a trade discount at 5%. Looking at this question, we have to start picking them one after the other. But let's not forget that in our accounting concepts, we are told that there is a going concern concept and a business entity concept that shows the account of the business that is being recorded. In this case, we are reporting for Fanny and Sons Enterprise. So for every student, you are expecting to put the information of the business you are reporting for at the beginning of your accounts. So we are reporting for Penny and Son Enterprises. Penny and Son Enterprise. So having done this, we have complied with the business entity concept. So now let's go into our question in details. August 1, the sold to Rojamila. Don't forget that I said in my introduction that the sales table or the sales journal is usually used to record only goods that are sold on credit, excluding fixed assets that are sold or bought on credit. So for the sales table, before we go in depth, we need to look at what we call discounts. In discounts in accounting, we have two types of discounts. We have the trade discounts and we have the cash discounts. But in the tables, most especially for sales table, purchase table, return inward table, and return outward table, we make use of the trade discount. The trade discount is a discount that is given over the catalog price of goods. It's the allowances given over the selling price. So this is done to induce the bulk purchase of customers, while the cash discount is a discount that is given to customers for prompt payments, immediate or instant payments. The cash discounts are further subdivided into the discounts allowed and the discounts received, which are all used in our cash book. Discounts received. But in the tables, the sales table will be making use of the trade discount. So in this case, we have in our question trade discounts given to showroom at 10% and trade discount given to Moiba at 15%. Looking at the question, the first thing you need to do under examination condition is to put the dates. So you add the August 1, which is when the transaction takes place. The year is 1996. So for August 1, Rojamila was our customer, Roger Miller. So for Roger Miller, that sold 20 bags of sugar at 14 naira each. 20 bags of sugar at 14 naira each. So what you need to do here is to multiply the number of bags of sugar sold to Rojamila by the selling price, which is 20 bags multiplied by 40, which will give us 800 naira. So under the details, we have 800 naira. In our folio, we are dealing with what? Sales ledger. So we put the sales ledger there. So the next thing to do is to go to the next question, which is 12 plates at 140 naira each. 12 plates. 12 plates. 12 plates at 140 naira each. So multiplying 140 by 12 to give us the value for the 12 plates. We'll have 140 12 So we have 1,680. 1,680. Having done this, we've completed the first question. All you need to do is to add up 1,680 to 800 to add our total. So we have 2,480. 2,480 as our total. So we move to the next question. So for showroom have trade bags of cement at 45 naira each, which is 530. What we multiply 12 by 45. 5 packets of tea at 15 naira each give us 25 naira. You add up the two to give you 605. So 10% of 605 give us 16 naira 50 kobo. So you take away the distance from the amount you are given. We have 544 naira 5 kobo that will go to the total. So for Moibas also have 15 shoes at 65 naira, which give us 975, and 100 packs of shirts at 13 naira each, which give us 1,300. So totally together we have 2,275 naira. So let's trade discount of 5% from the 2,275 naira. We have 113 naira 75 kobo. So we take away this trade discount from the total amount from the sales we make. So we have 2,161 naira 25 kobo. Having done this, we now move to the total column and add up all the totals for each of the transactions that were recorded. So for Rojamila, we have 2,480. For showroom, we have 544 naira 50 kobo. And for Moibas, we have 2,161 naira 25 kobo. So the total will give us 5,185 naira 75 kobo. So this total will be transferred to the sales ledger or the sales account. So I will repeat the 4 accounts involved in this transaction, which is Rojamila account, showroom account, Moibas account, and sales account. The rules for posting to ledger from the tables is to debit the individual account and credit the sales account. This is very, very important for us today to note, because this is what you'll be using to post at the end of the preparation of your sales table. So you have to debit individual account and credit the sales account. So for August 1, you have sales because it's coming from the sales journal. So you have sales, which is 2,480. August 12, you have sales, which is 544 naira 5 kobo. And for July 27, we have sales, which is 2,161 naira 25 kobo. So for the sales account, you have July 31st, which is the end of the month, are called sundries, which make sundry debtors. So you have 5,185 naira 75 kobo. This brings us to the end of today's class, and I believe you have gained something from this session. If you have any question concerning this particular topic, you can send a message to our email, and make sure you click subscribe, share, and like. Thank you. Happy viewing.